All right, for this Form 4797 tutorial, I want to go over a scenario where we have an S corporation that sells vehicles that it was using in its trader business. And so how are the vehicle sales reported on the 4797? What's the character of the gain or loss? So I do have a 4797 in front of us. Pages 1 and 2, we'll go through these in more detail, and it is part of the entire return. So I do have the entire 1120S in front of us, and so we might look at some of the other pages here that might be relevant. Okay. Now, in addition to the 4797, I have an Excel workbook with the financial statements for the company. Again, we won't go into these in too much detail because I just want to focus on the 4797 itself. But we've got the financials and then a separate workbook here on the sale of one of the vehicles. And this is because when we look at the fact pattern, we'll find that the vehicle wasn't 100% used for the business, right? There was some personal component or non-business use, and so that needs to be separated out when we compute the gain or loss on the disposition. And then lastly, I do have 2 slides in front of us, some of the rules, kind of the general guidance on these sales, and then in the second slide, the fact pattern itself. So if we start with the 4797, what is it used for? It is used to report the sale or exchange of assets that were used in your trader business. So you could report the sale of vehicles on this, machinery, equipment, office equipment. If you're selling real estate that you used as real estate rental property, you would sell it there. And so when we think of the different types of property, the most common ones are certainly Section 1250 property. So this is realty, depreciable real estate. And then 1245 property is kind of almost an all-encompassing, other bucket that we see most frequently. And so this is personal property, tangible or intangible, and it includes things like automobiles, right? Now, if you're selling property that was used in a trader business and you have a holding period for more than 1 year and you have enough gain that exceeds the amount of depreciation you took on the property, you might have Section 1231 gain issues, right? Now, in this example, we're not going to have that, but Section 1231 gains or losses are very, very important to track because it does give you the best of both worlds, right? If you have 1231 gains, they're just treated as capital. But if you take losses on the sale of assets used in a trader business that you held longer than a year, you can get ordinary loss treatment. So that's why they kind of refer to this as the best of both worlds. Now, again, that's not going to come up in this scenario, but I do have other videos covering those issues. So I'll put those links below in the description. Go check those out if you want to learn more about that. But in this example, again, we're just going to be doing situations where we have ordinary gain on the sale of both of the vehicles, so we're not going to have any kind of 1231 treatment, right? Now, for the 4797 itself, there are 3 parts, right? So part 3, gains and losses, this is generally used to report the sales of assets that you held more than 1 year, and you're selling the asset at a gain. All right. Now, if you're wondering, which part do I record everything in? The best place to start is look at the 4797 instructions. There is a table that tells you, depending on what kind of property you have, 1245, 1250, if you sell it for a gain or a loss, and more precisely what kind of property is it, that'll direct you to where you report the gain or the loss. So what we'll see here is we're going to have sales that reported in Part 3 and Part 2. And so those are going to be the sales of each vehicle is going to be reported in a separate section, and we'll talk more about why when we have a look at the 4797. So here's the fact pattern that we're working with. So in 2021, this marketing business, which is an S corp, it bought and depreciated 2 vehicles. So it bought a 2020 GMC Yukon, and this is a heavy enough vehicle where they were able to qualify for bonus depreciation. Remember, in order to qualify for bonus, you have to have at least, it has to be greater than 50% business use, right? If you're less than that, you can still depreciate it, but you're not going to get the bonus treatment. So they purchased this GMC Yukon on August 1st, 2021 for $48,500. And then over the course of the year, they determined based on the mileage that the vehicle was used 80% for business, right? So 80% is greater than 50, so qualify for the bonus depreciation, but you don't get to bonus out the entire cost, right? So we can't deduct the full $48,500, but we can take 100% bonus depreciation on the piece that is business use. And so what we did was 80% times 4850 is 38,800. So we took bonus depreciation on that $38,800 amount. Now the other vehicle we bought was a 2021 Lincoln Navigator. So we bought that on December 1st, 2021 for $67,500. And this one we did, in fact, use it 100% for business. So there was no non-business use. Again, we qualified for bonus depreciation because it's greater than 50. But because there was no non-business use component, we're able to depreciate or deduct the entire amount. So on our 2021 tax return, we had a $67,500 depreciation deduction for this vehicle, and we had $38,800 depreciation deduction for the Yukon. Now, fast forward to 2022, we sold both of the vehicles, right? So if we sold the Yukon on December 5th, 2022 for $40,000 in cash, how is that reported? Well, the first thing to consider is the holding period. So we bought it on August 1st, sold it over a year later in December. So that's the first thing to note, right? This is property that was held longer than 1 year. Now, the $40,000 sale price, again, this has to be bifurcated between what is the business use and what's the personal use portion. So of the total sale price, we allocate 80% of that to the business, $32,000, while the remaining $8,000 is allocated to the non-business use section. Okay, and now the Lincoln Navigator was sold in June for $55,000, and again, if we note the holding period, we bought it on December 1st, 2021, sold it June 15th, so it's under 1 year. And so for that reason, we're going to be reporting this disposition on Part 2 of Form 4797. So we're going to report the Yukon sale in Part 3 and then the Lincoln Navigator sale in Part 2. Okay, so if we go to the worksheet, well, actually, let me go to the 4797 first. I'll cover the sale of the Lincoln first, right? So remember, the Lincoln Navigator, this was 100% used for business, and it was a short-term holding period, right? So we're reporting it in Part 2, ordinary gains or losses. So we've got a 2021 Navigator. Sale date is June 15th, 2022. The original purchase date was December 1st, 2021. And so the $55,000 is the sale price. The depreciation that was allowed was the bonus depreciation taken in 2021, so $67,500, and the original cost basis was $67,500 as well. So when we compute the gain, as it notes up here, it asks us, in order to compute the gain or loss, subtract column F from the sum of D&E, and we get the gain of $55K. Now that makes sense, because if we think about this conceptually, the depreciation deduction reduced our basis to zero. So any amount of sale price for a business use asset, 100% business use, is going to be all gain. So the total sale price there of $55,000 means we have all of it is going to be recorded as gain. It's ordinary gain, and it's going to be reported on the 4797 and included in our ordinary business income for the year. Now, the more complicated piece here is the Yukon, and this is because the Yukon had a business and a personal component. So Part 3, again, this is where we're reporting gains, right? So notice here it says gains from the disposition of property. If we had losses, it would be reported on the first page. But in this case, we have gains from the sale of property, and so we potentially also have some recapture of the depreciation, and that's what we do have here as well. So on line 20, notice here the gross sale price. Now in our fact pattern, the gross sale price was $40,000. That's what it was actually sold for. But remember, we are apportioning out the piece that is actually attributed to the business use. So 80% of $40K is the $32,000. We have our business use cost portion, which was $38,800. And then the amount of depreciation that was taken, which was all bonus in 2021, was also $38,800. And so our adjusted basis leading up to the date of sale was zero. And so that's why we have our total gain of $32,000. Now, if we quickly jump over to the this reconciliation, hopefully this will make a little more sense when we look at the breakout here. But the Yukon here, remember that the total purchase price initially was $48,500. But that, again, that has to be separated between what was business use and what was non-business use. So 80% business use, $38,800. That is the cost allocated to the business. And that's also the cost or the depreciable amount that we could even take depreciation expense on, right? And so we took depreciation on the whole amount there. So our basis is $0 from the business's perspective. But the business did they did actually spend $48,500. So what do you do with the non-business portion? Well, the remaining amount is just is personal in nature, it's non-business in nature. The depreciation on it is zero, right? Because we can't take depreciation expense or deductions on non-business use assets. So when we get down here and we look at the allocation of the sale, $40,000 was the total sale price. We allocate that 80% to business, 20% to personal. So when we look at the adjusted gain or loss on the business side, there's our $32,000 number, right? So the $32,000, again, that's what we're seeing reported on the 4797. This piece right here, the non-business, this is just done for our own bookkeeping reconciliation purposes, right? None of this is actually reported on the 4797. But we can see here, okay, well, we did have an allocation to non-business use. We have some cost basis. So we actually took a loss on the remaining piece of this, but the loss is not deductible, right? You can't deduct losses on the sale of personal use assets, right? That's a big no-no in the U.S. tax realm. So for book purposes, our total gain on the sale of this was $30,300, but when we separate it out between what actually is recorded for business and what's the personal non-deductible piece, that's the separate elements there. So the $1,700, we have recorded that on the tax return as a non-deductible expense. And so we have a book-to-tax adjustment for the $1,700 there. Again, a bit beyond the scope of this video because we just want to focus on the 4797. But you can see here in Part 3, there's no element here that shows there was any personal use portion, right? It's our responsibility to just make sure we're reporting the business use pieces here, and then we're not taking into account, at least on the 4797, those non-business use elements. Okay, so we've got these amounts here, and if we look back at page 1, part 2, so we've got the Lincoln Navigator piece there. There's the $32,000 flowing through from part 3, and so the total amount of our gain, ordinary gain recognized on the sale of these assets, is $87,000. Now the $87,000 is ultimately reported on page 1 of the 1120S. So we can see here on line 4, it's asking net gain or loss from 4797, line 17, and there's our $87,000 figure. So the sale of these assets, at least in this case, is all ordinary gain in nature. It's all just being, it's not separately stated, right? So it's all being recorded on page 1. So it's being included in our net ordinary business income or loss number down here. And in contrast, if we look at Schedule K, for example, in some cases, if you did sell the property and you had perhaps a 1231 gain amount, we would see net 1231 gain separately stated down here on line 9. Again, we don't have any of that in this example. I do have some examples where we have 1231 amounts, and we have unrecaptured Section 1250 gains, right, for real estate. If you want to check those videos out, I would check the links below. I'll put those all in there so you can go have a look at those if you want to look at some of those fact patterns. But in this case, for the sale of these vehicles, it was all just ordinary gain, effectively a recapture of the depreciation expense. And so everything was reported as such on the 4797. So, okay, so that covers it for this video. I do hope that was helpful. If you have any questions, feel free to leave me a comment below. And as always, I look forward to seeing you again on the next video. Thank you.